The UK officially seeing the effects from Brexit with outside investors not coming into the country. It's a big deal. Let's talk about it here at Capital Markets. Traders, what's up, guys? Welcome back to Capital Markets. It's your host, Cleveland Bishop. Hope you guys are having an awesome Wednesday, and we've already had a jam-packed week. So I want to give you guys a scoop on the fundamental analysis and tie you in also to what we're looking at from a technical standpoint, okay? So to get these videos, make sure you guys like and subscribe. Like the video to start boosting this so we can start growing the community, and subscribe so you can get notified that we are dropping the videos, all right? So what we've had so far this week was a retail sales number that came out for the US dollar. It did come out as expected. We had a core retail sales number that came out better than expected, but interestingly enough, we had no move in markets, okay? A lot of people think it's this summertime lull in market activity. A lot of people on their vacations, a lot of these larger investment bankers on their private islands, flying their jets all over the world or whatnot. These guys are not trading right now, so we are seeing a decline in volatility, but we did see some volatility pick up in regards to the GBP. So we just got some data that came out called the climate change, which shows us the amount of outside individuals coming in looking for jobs inside of the economy. Well, we're actually short 7,800 jobs. Expected was 2,500. That is massively higher than what was expected. Again, most of those people are coming from the European Union into the UK, and again, we saw really nothing there. And that's directly tied to Brexit. Lots of people fearing that the job market inside of the UK is going to be unstable because of Brexit. So what are you seeing? You're seeing less people looking for jobs outside of the country, wanting to come into the country, looking for those types of employment. So we saw a sharp move sell side on the GBP today. You guys can see a quick screenshot of that here on the 4-hour. And we did end up hitting back at a low of structure, but we may start seeing markets start to break this low here. We're going to keep an eye out on what happens in the UK. Theresa May is having a very, very hard time in regards to how she is moving in the economy because of what the European Union they're cracking down on her. They're making it so that it's possible we're going to see a hard Brexit instead of a soft Brexit. Hard Brexit means that there's going to be a very, very non-transactional agreement between the UK and the European Union. No free trade, lots of different things involved in immigration that aren't going to be happening. Lots of bad things in regards to the job market and productivity. Soft Brexit means that they'll still be able to do trade. They may be able to also still be able to loan money from the European Central Bank, right? So those are things that, again, if they happen, it's more of a soft Brexit. Even though they left the European Union, they still have a lot of the different features and assets that they did when they were inside of the union, all that stability that the union comes with, okay? So let's keep an eye out on the GBP as well. Now, what's interesting, I want to pull over to the Australian dollar and the New Zealand dollar. We've seen a massive hit in the Australian dollar because of the trade war. All right, Australia's biggest trading partner is China, and anytime you start to see China start to go through anything politically, economically, or anything dealing with war, you're going to start to see those rippling effects inside of those markets that they are heavily traded with. And that is the Australian dollar, that is the New Zealand dollar. We've seen a massive decline in the Australian dollar. Here's a quick screenshot. And also we've seen a massive decline in the New Zealand dollar as of recent also, okay? So again, if we start to see pressures leave off in regards to this trade war situation, you will see those markets start to turn around, but that's not what we're predicting, okay? Trade war is just getting started. China's about to start cracking down on more tariffs, and so that is going to get us more and more sell-side momentum on those pairs. And lastly, I want you guys to take a quick picture look of this Euro USD closing off. You guys can see on the Euro USD on the weekly, we have consolidated around this price area now for almost 7 weeks, okay? Markets are having a hard time breaking lower than $1.15 and breaking higher than $1.18, okay? What is going to be the catalyst that drives markets outside of this 300 pip range? Well, whatever it is, folks, it's something that we have to anticipate and we have to be here for, because it's going to lead us to some serious profits or you guys getting stopped out. But if you're on the right side of this move, it's going to be very, very fruitful, okay? What I think is going to end up happening is basically I think that we're going to get a little bit of the pressure that's come into the euro based off of all the different things happening in the Southern European banks and all of the new data behind the European dollar getting stronger because he may start to increase interest rates in 2015. We may see some more positive data, which means that euro may get stronger, which means we may break to $1.20. That's my idea. I think we'll break to $1.20 before we break down to below that $1.15, okay? So I'm going to keep you guys posted on all that data. Make sure you guys stay subscribed here. And by the way, if you guys are looking for a broker, head over to capital-markets.com. We're one of the top brokers in the entire industry. We route from some of the best liquidity providers, and we also have some of the tightest spreads, which means you're going to be paying less and less per trade, okay? Head over to capital-markets.com. I'm Cleveland Bishop. See you guys tomorrow.